Hello, everyone. You're welcome to this week's market outlook. This is our outlook session for the week. This is what we do every week, and the goal is for us to analyze the market, look into the financial markets, and see where we have opportunities to buy or sell and make profit for this week, right? So we begin by looking at the economic calendar. And this is so important because this gives us a direction as to where volatility is likely to come from, all right, during the course of the week. Whenever we have an event-heavy week, then we know that we're going to be expecting a whole lot of volatility. Volatility is good for trading, but then it's also important to make sure that you're watching the times where this volatility comes into the market so that you can be very well prepared for it, right? And positively or negatively, basically to protect yourself and to take advantage of the volatility to make profits, right? So let's begin now. On Monday today, we have a bank holiday in Japan, all right, and they call it the Marine Day. So that will lead to a drop in volatility during the Japanese session. Of course, that's not going to move the market or affect the market a lot because the Japanese session usually closes before London session opens. So when London session opens, then we're ready to go. Then also on Tuesday, we have the governor of the Bank of England, the Governor Bailey, talking about financial stability, right? He's going to be talking about financial stability in the UK. And of course, we expect him to talk a bit about monetary policy as well, where he will talking about interest rates, he's talking about inflation and employment in the UK. So we expect to see some volatility in the market during the time of his speech on Tuesday tomorrow, right? On Wednesday, we don't really have anything. Then on Thursday is the day we expect to have the most volatility this week. And there's a whole lot going on Thursday, like you can see. We have the flash manufacturing and services PMIs. These are very important. Producing managers index. This is something we watch for every month. And on a day like Thursday, where you have the data coming out for the Eurozone, for the UK and the US, is expected to be quite volatile, right? And also on Thursday, very importantly, we're expecting to have interest rate data for the Eurozone also coming in. And the main refinance rate for the Eurozone, this is basically the interest rate, benchmark interest rate for the Eurozone. It's usually set by the European Central Bank, right? And last month's data for that was 2.15%. The forecast for this month remains 2.15%. Okay, so we see that there's a whole lot going on between the UK and the US because Trump has been imposing a lot of tariffs on the US, on the UK, on the Eurozone, sorry. And then also he has threatened, Trump in this case, has threatened to even add more tariffs on the 1st of August to the Eurozone, about 30% more tariffs, right? So we're expecting all of that to bring a whole lot of uncertainty and volatility to the market, and that is basically informing what the European Central Bank is doing. They want to keep interest rates steady for now, for this, in order to weather the uncertainty that is likely to come going forward, right? They've cut interest rate before, but they're not looking to cut again now because there's a whole lot that they're likely going to face, with the Trump or the United States imposing more tariffs on the Eurozone. And then on Friday, we have retail sales for the UK. So this is what we look at every week. We want to make sure we have an idea what the news is saying, what the fundamentals are saying before we proceed to technicals, right? So let's look at technicals now. Now we start with the dollar index. The dollar index is basically the reserve currency of the world. The dollar is the reserve currency of the world. It underlies most of the transactions that happen in the financial market. So we want to be able to get an idea of where the dollar index is going, to give us an idea of what the other instruments are going to likely be doing, right? Now you can see that the dollar index over the longer time period has been very bearish, very bearish. Basically, since Trump came into power, the dollar index has been significantly bearish. This is May, from around February. Basically, you can see the drop we've seen. This is February. This is when Trump came into government. And from then on till now, you can see massive, massive sell, massive bearish moves on the dollar index, right? That's what we keep seeing. And at this moment, the bearish outlook remains intact. Nothing has changed that bearish outlook yet. But this time we're expecting to see price beginning to sell back again, beginning to come back. Last week, 2 weeks ago and into last week, we saw that we had positive numbers for NFP, and that drove the price of the dollar, drove the value of the dollar index up a bit. And then we also had some other positive data. Last week we had retail sales numbers that came in positive, came in 0.6%. That's against a negative number of minus 0.9% the previous month. So all of that has really helped to push the value of the dollar index up. But then, like we said, the overall bearish outlook on the dollar index remains intact. So for that reason, we're expecting to see even further sell-offs in the dollar index, right? And if the dollar index is going to sell, then what are we expecting to see from other instruments like Euro USD, like gold and all? Let's try and figure that out. Let's go to Euro USD and look at that now. For the dollar index, this is what we are looking to see now. So you see, we had a very strong trend line here that price has respected very heavily, right? Now, what we're seeing, you can see price touched it all the way and kept touching it. Now, what we're expecting to see here is sort of a breakout, a break below this trend line. If we see price break below this trend line here, that will be our signal. We know that price is going to go all the way back here. Definitely going to go all the way back here. And what it will just do is do this breakout below, make a pullback of some sort, make a pullback into this zone, and then we will expect to see a sell all the way down to this bottom. Okay, that is what we're expecting now. Once we see a break below this trend line, that will be our signal for a sell on the dollar index. Okay, now when I look at some other pairs, where I look at Euro USD, for example, something stand out for me here. I see that first and foremost, I can see that there is a 61% retracement level here. Watch this. As the dollar index has been very weak, when you look at Euro USD, you notice Euro USD has been very strong, very heavily bullish for a long time, for a while, right? Now, we see that price has been selling off, but this sell-off we're seeing on the Euro USD has meant simply to facilitate the pullback on the Euro USD here, right? This sell was just to facilitate the pullback, and you can see how the sell has been, right? It hasn't been so decisive and so strong. It's meant to facilitate the pullback of on the Euro USD, and at a point we expect Euro USD to resume an uptrend. And from what I see here, I can see that the Euro USD has done something. If I use the Fibonacci here, I can see that this is a very strong retracement level right here, and price jumped into that retracement level, and currently it seems to be pushing up. Now, just like we saw on the Euro USD, on the dollar index. Remember, the dollar index has an almost perfect opposite relationship with the Euro USD. So if you see the dollar index, pushing up, you should expect to see the Euro USD coming down. If you see the dollar index coming down or expected to come down, you should see an uptrend in the Euro USD. So that's the relationship that's very, very intact. Now you can also see we've used a trend line here, and you can see how near perfect this trend line is. How price has jumped into this trend line regularly, constantly, and pulled back here, pulled back here, pulled back here again, pulled back here again. Now, what we're expecting to see, you can see where I marked this support, this resistance level here. This is a supply zone here. Once price breaks, and you notice there's a conference here, we can see that there's a resistance level, and also we see that there's a trend line that has been respected a lot. And of course, a trend line like this has been respected a lot is also going to act as a strong resistance level. And incidentally, we're seeing a resistance level here. We're seeing a resistance level And then we're also seeing a trend line go through that place. So what we're expecting now from looking at the dollar index and remembering that this relationship is an inverse one, we should expect to see Euro USD break out of this level now. Once Euro USD breaks out of this level, of this resistance level, and also outside this trend line, that will be our signal to enter the market for a buy. So we should see something in this direction, a pullback, and then we should expect that price will rally back to the 1.18 level. 1.18 level. So this is the signal we're waiting for right now. Until price breaks out of this level, this is not it won't be a good trade to take. So we'll be expecting to see a breakout. All right. Now we can see that price is pushing up on Euro USD here. We can see that price is pushing up. Price is pushing up. And so we're going to watch this very keenly. This area is going to be a very, very keen area for us to watch. Once price breaks out of there, then that will be our signal. So this is the area I'm talking about now. Okay, that will be our signal here. What price does here? Does it reverse around here and start coming down? Does it break out? The breakout is what we'll favor. We're favoring the breakout because we can see that this area here is sort of a strong support level. Sort of a strong support level here, and it's also an area that the market watches, a Fibonacci level. So a Fibonacci 61.8 level is a very solid level in the market, and we can see that price is pulling back from that level now. Once we see price break above this, then that's our sign. It means that the market is moving in the direction we expect it to go. Okay, so that breakout will give us a sign that this is where we should be looking for our buy trades. Okay, this is Monday, and we'll be expecting to see a whole lot play out in this direction as we go on. Then let's look at GBP USD. Now, when you look at GBP USD, this is an analysis we did about, I think, about a week ago or so, and you can see that when we look at the daily chart here, you see how price came into this support level here. Price came into this support level, and then I remember that I had analyzed this trade, and I was telling us that is an area that's where I'm expecting price to pull off from, and you can see it hit the 61.8 level here, right? So, but the signal I wanted to see here was that price reverses from here. Okay, now of course the way we set the trade, for anybody who had entered the trade then, the stop loss was still intact and price has been moving very steadily up. Okay, and so now what we're looking at here is that the next leg of this movement now is what we still expect. We expect it to be a buy. And remember, GBP USD is one of those currency pairs too that has this opposite relationship with the dollar index. When you see the dollar index buying, when you see the dollar index buying, then you will see a sell-off also in GBP USD. Now, since the dollar index is expected to sell from what we saw earlier, we should be expecting a buy when it comes to GBP USD, right? Now, look at this GBP USD now. You see something here. You see that it's currently at a resistance. It's currently at a resistance. But what are we expecting to see there? This is a trend line here now. So we're expecting price to break out of this area. This area is an area of importance for us now. This area is an area of importance for us now. If price is able to cross out of this level, then we should be getting in on the buy trades. But until price breaks out of this level, we are going to keep an eye. Watch. Now, the bottom here was the best place to have entered this trade, like we had analyzed before. But then, since we couldn't get in or for those who got in, of course, those who got in already in profit. But for those who didn't get in, we can see that this level here, price has moved away from here. And until price breaks out of this level now, until price breaks out of this whole level, it won't be a smart move for us to enter the market for a buy anymore at this time, because markets don't move up. Market moves in waves. Okay, market moves in waves, and we want to be able to catch the right wave in the market. We want to be able to catch the right wave of the market. Okay, now we need to see price break out of this. If price doesn't break out of this, no, we're not going to be getting on that trade. We're not going to be getting on that trade, right? And remember, we have some volatile news, especially on Thursday, coming during the week. I know Thursday is a bit far, but then the market will do what the market will do. Okay, so now if price doesn't break out of this area, that means it's going to keep coming down. It may give us another opportunity for a buy around here. Okay, that will also be fine. Okay, but at this moment where price currently is right now, there's no trade to take. There's no trade to take here. So for me, I would favor a breakout, breakout of this entire level, breakout of this resistance, breakout of the trend line, and then that will give us a sweet move to the upside. But in this case, if it doesn't do that yet and comes back down, then that should still give us an opportunity for a buy here around the bottom here. Okay, so we're going to keep our eyes on that to see how that plays out, and that we'll be able to get on a good trade when that market does that. So it either breaks above, which would be a good sign for us to buy, or it comes below, and then this should give us another opportunity for a buy around here. Okay, but at this moment, there's no trade set up there. Let's look at gold. What's happening with gold? Okay, so gold is also an instrument that we're watching this morning. Now you can see that gold has been respecting this very strong trend line, right? It's been a trend line that gold has been bumping off of, bumped off of three good times. And this area here is a strong area where price had pulled from. This is also a Fibonacci level, a 61% Fibonacci level on gold. So you can see price has really been moving up. Now, for what I see on gold, gold might still sell and come all the way down to this trend line again, in which case that'll be very good. Okay, this will be something like this. Okay, probably price will hit this support somewhere like this. If price comes to this area here, then this will be a good area for a buy on gold. But if not, then of course, we should see a breakout of here. Once price breaks out of this area, let's look. Now, we've been looking steadily around the $3,400 level. This is the $3,400 level. So gold has gotten there before, and that's an area of interest. It's an area of interest we've been watching. So if price breaks out of this current level now, it should move all the way to the 3,400 level. Okay, but if it comes down to this bottom here, so it gives us bumps again into the trend line. If it bumps again into the trend line, thereby hitting this support level, this for me would be the best point of entry. This will be such a nice point of entry, and then this, because we'll be able to capture a very heavy upside. Very heavy upside. Price bumps into this area. This is a $3,300 level. If price comes to the 3,300 level again, that's a very good sign. And then we'll be able to enter and capture this move right here. It's going to be something like this. That will be some 380 pips, right? And when we take it all the way to the 3,400, which we're looking at, that will be over 600 pips. Okay, that's for gold. And so for gold right now, we're not going to enter into any trade either. This area is very strong, this resistance level here. We expect to see a breakout. In the case of a breakout, like I said, we expect price to go to at least the 3,400 level. Of course, we expect more upside, but at least the first level we're looking at is the 3,400 level. But for me, I would prefer it comes down, sells down to the 3,300 level, and this will be the best opportunity right here, because we can capture over 300 pips in profit there. That 300 pips move right there. So we expect that to happen, and this is what we're going to keep an eye on and during the next few days as the market begins to move. Okay, now for USD JPY, we see USD JPY has been very bullish, has been really very bullish. But from certain news we had coming out of JPY last night, we see that they had an election in Japan, and then the current prime minister lost a lot in the house. So with that huge loss in the house, it's not expected that the prime minister will be able to move forward with some of the bills that he's been pushing and all the promises that he's made. So that's weighing on the dollar, on the USD JPY right now. That's weighing on USD JPY. We're expecting USD JPY to sell around, come down to around the 146 level, the 146 level here before we expect a buy. But of course, below, as price begins to come down, we should be able to get opportunities for a sell too, as price comes down. But currently, we don't see anything, right? The market is quite slow this morning, so of course it's the beginning of the week. I believe that from tomorrow into Wednesday, we should be seeing bigger moves in the market. We can see a lot of, potentials in the market currently, but the market is not giving us entry levels yet for these trades. Okay. So also, if you're on the Telegram group, I know a lot of us are on the Telegram group. If you're not on the Telegram group, please reach out to your account manager. Let them add you to the Telegram group. We give further updates, on these trades in the Telegram group. We give you trade signals that you need to take, actual trades to enter, buy and sell, your stop loss, your take profit. We give you all that on the Telegram channel, and then we'll be able to give you more of that. Of course, for all these trades that are beginning to play out, we're going to give you more of that during the course of the week. So all right, so guys, finally, remember that trading has risk involved. So use proper risk management and understand that what we're sharing here are just, trade ideas. Every trade you take, you need to remember there's a risk involved in trading, and then you need to risk only very small, risk only what you can afford to lose on every trade. 2 to 3% of your capital is what is recommended, right? Thank you guys. I see you guys on the next one.